Today, we're going to be discussing the top 10 tips that any business owner needs to consider when they're first starting a business. Let's get into the tips. Tip number 1 is all about pricing. And a lot of people think that cash, sales, what sort of business that they are in is the most important thing, but I think the pricing is. You can have a project that is potentially loss-making because the pricing isn't right. So really what I'd like everyone to do before they start their business is research their pricing. Look at other like-minded businesses. What prices do they charge? Are you doing something different? And in which case, can that command a higher price? You look at something like British Airways versus Ryanair. Ryanair is typically cheaper and British Airways is a higher price, but they offer that extra level of services, which allows them to charge that higher price. And a lot of consumers will look at the highest price package and pick that highest price package. So I'd like you, if you have a pricing structure, think about if you can introduce packages, a basic, an advanced, an ultimate package, because someone is always going to look for that highest price package in your business. Tip number 2 is about business structures. And does your business structure work for you? Well, good news is that we can help answer that question of limited company or sole trade. So typically a limited company is more expensive with compliance fees, but you have more flexibility in how you pay yourself, whether that's salary and dividends, whether that's just dividends, or whether that's just salary. Whereas a sole trade is cheaper on compliance fees. You have one submission a year that you need to do, your annual tax return, but there's less flexibility, which means that all profits that are earned in that sole trade is going to be taxed on you and you only. So there needs to be things that need to be considered there. So we recently had a client that was a engineer in the canal boat sector, and he was a sole trader for a number of years, and in one meeting we changed over his structure to be a limited company. We added his partner on as a shareholder and a salaried employee. Instantly he saved tens of thousands of pounds in tax every year. Really important that you get the right structure at the start of the business. Tip number 3 is all about cash and budgeting your cash. So every single person knows what cash is coming in and what cash is going out every single month from a personal perspective. So you know what your salary is, you know what your mortgage is, you know what your water bill is. And that same rule should be applied to your business. You need to be looking at the next week's expenses, the next month's income, to make sure that the business has the right amount of cash to be able to sustain growth, to be able to employ that next employee, to be able to pay yourself effectively. Whilst budgeting, you should also budget for your end of year tax liability. So there's a few things. You've got VAT to pay quarterly, you've got corporation tax or personal tax to pay annually. It's really important that when you're getting income in on a monthly basis or weekly basis, you put some money aside to pay those tax liabilities, because at the end of the year, you're going to be slapped with a tax liability. And if you haven't already saved that money aside, you're going to be eating into next year's cash, which really is going to affect the business growth and your own personal cash position. Tip number 4 is all about cash and how to optimize that cash. So you know what income you've got coming in, you know what expenses you've got going out. Can we stretch that payment period? So it's all about speaking to your suppliers, seeing if you can extend payment dates. It's about getting your clients on standing orders or direct debits to make sure that you're getting that money in weekly or monthly, and making sure that it's regular income that you don't need to potentially go and chase. If you're in a business like maybe a Pilates studio where you're going out, you're getting refreshments, you're getting pieces of equipment, but you've got suppliers that won't give you payment terms, then I would really advise exploring a credit card. Now, a credit card can be one of these that is interest free, or it can be something that you pay and you give yourself 30 days to be able to pay it back without any sort of interest, without any sort of charges. So what I would recommend to anyone would be look at the best credit card providers out there, try and get something where you can pay it back the next month and not incur any interest. But what you're effectively doing is stretching those payment terms out to make your cash work for you, because it's better to be in your pocket to allow you to grow your business more than to be paid over to a supplier instantly. Tip number 5 is about tax thresholds. And that's tax thresholds from a personal perspective and a business perspective. So if you're a limited company, you've got corporation tax to pay, and there's no tax threshold to that. It's between 19 to 25% on a marginal basis, depending on how much your profits are. But also, you've got to consider VAT. So if you're not a limited company and you're any type of business, sole trade or limited, then if you have turnover or sales over £90,000, you need to register for VAT. And that VAT bill might be due monthly, might be due quarterly, might be due annually. It'd be a conversation for you to have with us to make sure that we can put you on a scheme, a VAT scheme, that's going to work for you and your business. But also it's important to know from a personal perspective how much tax you're going to pay. So in the UK, every single taxpayer has £12,570 completely tax-free. The next £37,700 is your basic rate of tax. So if you're a salaried employee, you'll pay 26% income tax and national insurance, but if you're getting dividends, then you'll pay 8.75%. So you can see where it's beneficial to go into a limited company because you're paying less in tax. After 50,270, which is the 37.7 plus the £12,570, you'll pay a higher rate of tax, which is 42% income tax and national insurance, or it's 33.75%. Now, anything above that, there's some really key thresholds I want you to keep in mind and have a conversation with us about. There's £100,000, because for every £2 over 100,000 that you earn, you lose £1 of that tax-free allowance. That's an effective tax rate of 60%. And the final threshold is the pension tapering relief threshold, which starts at £240,000. So if you have income exceeding 240, or you know that you're going to hit that in the next 12 months, speak to us beforehand. Let's see a way that we can mitigate paying as much tax as you potentially will, exceeding that £240,000. Tip number 6 is all about other income sources. So most of the time people think that the only income source that business can have is sales, but we also need to consider potentially available grants that you can apply for, or finance that you can apply for. So I think it's really important, if you're in a business sector that is potentially for growth or for giving back to the community, go onto gov.uk, search for grants and see if there's any available grants in your area that potentially you can apply for. That could be an instant injection of 25, 35, 50 grand of cash that can really help grow your business. In addition, business finance is always available. So if you've got assets in the business, you can go and get asset-based finance. Or if you look to finance real startup, you can potentially go and get private equity or venture capital investment that will allow you to speed up that growth and to make sure that you're pushing your business as much as you possibly can in those early years. If you have any kind of cash flow issues or any kind of questions about whether your business would be able to apply for this sort of things, get in contact with us and we can really assist you on potentially getting finance or potentially looking at grants that will help you push your business to the next level. Tip number 7 is all about software. We always see clients, and recently, only yesterday, I went to a telecoms company. They are manually processing everything. So their staff are spending a huge amount of time in the business processing things manually rather than allowing software to do the heavy lifting for you. So what I would advise everyone is to get up-to-date software, and that can be Xero, for example, who we partner with. Now with Xero, it will allow you to automatically put bank feeds in and really do the heavy lifting for you, which means that bookkeeping is far easier. It's a time save for the directors and business owners, so they can spend a majority of their time pushing the business forward and making sure it grows as quickly as possible rather than sitting behind a computer screen doing bookkeeping. If you're a sole trader, then there is a really important rule change. So from the 5th of April 2026, there is Making Tax Digital for income tax self-assessment. So everyone from the 5th of April 2026 with income over £50,000 is now going to need to submit their figures on a quarterly basis. So you're going to need to get onto software anyway. So if you are a startup business, getting onto software as quickly as possible to build that foundation for your business is really vital to allow you to spend more time on your business rather than in your business. Tip number 8 is really about your future aspirations. And most of the people don't have an answer for this now, but I really want to plant that seed in your head so you can start thinking about where you want the business to get to. Are you looking for a business that you can spend 3 days a week working in and it builds a nice lifestyle out of business hours for you? Or are you looking for something that you want to spend a lot of your time in for the first 10, 15 years to build out a legacy that potentially you can then sell that business on, hand it to your kids, get a management buyout, something like that? I really think it's important to know where you're looking to get to in the future, because as soon as you know what your end goal is like, then your accountant can reverse engineer that, put steps and processes in place, laid those foundations, so it's going to make it a lot easier for you to reach that end goal. So there's no right or wrong answer to this. There's no sort of instant answer that I can give you. It's really about what works for you and your family and where you want to see yourself and your business in 10, 15, 20 years time. Tip number 9 is about wills and power of attorney. I'm going to keep it really short and sweet, but we've already touched on taxes, and the other unavoidable thing is death, unfortunately. I think that any business owner now needs to consider wills and power of attorney. You've got employees of your business that are relying on you to pay their wages every month. You've got filings potentially on a quarterly basis, maybe on an annual basis, that you need to do. And if you haven't got a will, then potentially your estate can't go to your family, and it might go to the Crown, or some case it might be sent off to charity, who knows. Or if you haven't got a power of attorney, then who is going to approve all of your documents? Who is going to be able to send money out from your personal account? There's not really anything in place at the moment that allows your family or one of your directors or key management staff in your business to be able to do that for you. It's extremely important that you get wills and power of attorney in place. So tip number 10 is why you should use an accountant. So an accountant not only is going to maximise the tax relief that you get on expenses, and is not only going to allow you to submit your compliance returns on time, an accountant is really there for strategic advice, as I said before, where you get to in 5, 10, 15 years time, but also it's someone that will introduce people to you, someone that will go out and network for you. We've had numerous examples where a client of a plastics company has purchased other companies that have also been our client because we've put 2 and 2 together. So it's really important that you've got an accountant there for peace of mind, to keep you aligned with your strategic goals, and to keep an eye on those key performance indicators that you have in your business. So that might be your profit margins, that might be your cash flow ratios, like how many days it takes you to be paid from your customers versus how many days it takes for you to pay your suppliers. We want that in your favour, not the other person's favour. So there's a few different ratios there that really the accountant should be looking at. And that's really important for you to get an accountant, because you can get that strategic advice, you can get that peace of mind, and you can work on your business, not in your business.